Taking a look at the week in review. Let's just start out and take a look at a few of the commodities where we closed for the week. In December, corn, big up week. In December, corn up 24 cents in the December contract. We closed it right at 387 today. November, soybeans up 8 cents today after making contract close earlier this morning upon the release of the report. Looks like we're going to close above 874 in the November contract. December wheat up 16 cents on the week. Looks like we're going to close that above 484. Cattle just a hair above unchanged on the week. We're up about 5 cents at 140.52 in the October contract. October hogs, the loser this week, down $1.63, 67.52 in the October contract. As the time of this recording, looks like oil is going to close $1.20, $1.30 lower on the week, somewhere around that 44.70 area. The dollar looks like it might be a little bit weaker as well, down around the 95.20 area, and the S&P looks like it might close a little bit up on the week within last week's ranges, right around that 1950 area as the last tick on that as well. The big thing this week in the grains was the monthly supply and demand report, and all eyes were just going to take a look at the production estimates, and let's just take a look at the corn numbers. And going into the report, most of the trade was expecting a reduction in yield. The average estimate was 167.6 bushels per acre, down from last month's 168.8 bushels an acre. Well, the USDA came in, they left the acres unchanged, and they came in at a 167.5 billion bushel production numbers, so essentially right in line with what the USDA had expected. But the surprise might have been is that they lowered their carry-in from this past year. We did see the carry-in old crop corn stocks drop about 40 million bushels. We were at 1.772, we came in at 1.732, so we've seen some usage uppage on the demand side of the equation. Exports, ethanol took that. So what we did is we did reduce that carryover to bring into this current year's supply and demand balance sheet. So with the production numbers about as anticipated, but less than last month, and the cut in or the increase in demand, which reduced that carryout, we were plugging these numbers into the current 2015-16 carryout at just under 1.6 billion bushels. Suddenly, a little more emphasis on the carryout this upcoming year, and that's the trade was that's less than what the trade was expecting. We were expecting a 1.65 carry-in. We came in at 1.592, and that's down from last month's 1.713 billion bushels. The corn market reacted accordingly. We did see some strength in the corn market as it pushed higher today and closed at the 24-cent high off those numbers. Taking a look at soybeans before we dive deeper into it. Soybeans, again, everything was on the production concerns. Last month, we pegged yield, or the USDA pegged the yield at 46.9. We were looking for about a half a bushel an acre cut, and we actually seen an increase at 47.1 billion bushels. We left harvested acres unchanged, but we increased the production number. That in turn increased the carryout number as well. And when we plugged those numbers in there, we did, to back up, we did see a reduction in old crop soybean carryout down to 210 million bushels. That's 30 million less than last month, and that was on the crush and exports as well. So we did carry in 210 million bushels of beans into this year. Last month's carryout for this upcoming year was 470 million bushels, according to the USDA. We were looking for a reduction clear down to 415 was the average estimate out there, but with the production increase, we only reduced it 20 million bushels down to 450. And that weighed upon that soybean market initially. And what we seen was the November contract go down and make contract lows upon the release of that report, bearish beans, and the report was viewed as bullish corn. And what we seen was the two fighting each other. As we pushed the thing down, we drug corn down as well, but we did see some strength in corn, and corn actually closed near the highs of the day. We're still in a somewhat of a trading range here. And as we move forward, we have to ask ourselves, did today's numbers push us outside of that range? And most estimates, probably not at this point. $4 looks like a reasonable target short term in the December contract. Soybeans, though, on the other hand, looks like it'll have to take out still that 89 area, 889 area to see any follow-through positive action. But closing beans up today, or back to neutral today, after being down 20 cents at one point, is a positive sign for the bean market. But again, I don't think today's numbers gives us a trend from this point forward. I think we're still in a somewhat range-bound trade, and I think the driving force from this point forward is going to be what are the combines telling us as we move through harvest over the next several weeks or next couple months even. Weather concerns out there, early frost thrown out the window. At this point, we're looking at the coldest temps according to the weather maps the next couple days up in the Dakotas, Minnesota, Wisconsin. Then we're looking at a warming trend coming in for the next 2 weeks. If that holds to be true, with the early planted corn and soybeans in the northern part of the grain belt, we're going to dwindle those frost concerns from this point forward. So again, the driving force is going to be what will the final production number be, and then we'll go ahead and start taking a look at the demand side of the equation. Again, we are behind last year's exports at this point, both about 65% of last year's range at this point. We have seen some big numbers in recent weeks in soybeans, and we do see the Chinese come to town. Chinese delegation comes to town. I believe in the next couple of weeks we could see some frame contracts there, and we could see some big soybean purchasing, but keep in mind we need to have some big soybean purchasing to meet what the USDA has pegged for exports in the upcoming year. One note of interest in the report today was with the yield number being as high as what it was on soybeans, is that the USDA did pencil in a record weight for pod weight. So that's being scrutinized a little bit. That'll be interesting in months to come to see how that pans out. Other than that, I would look for some resistance still up there in that $4 area in the short term in the soybean or in the corn market, and I'm going to look for support down around that 360 area as well. Soybeans, again, for some follow-through upside, we're going to have to take out that 889 area, and that contract low is going to be certainly support here over the next couple weeks as well. Moving on, taking a look at the livestock markets. Cash cattle trade this week was a mixed bag, anywhere from 139 to 142. A little bit of 142 light trade in the far west. Most of the corn belt, Iowa, traded the 139 to the 141 area this week. We did see a wild ride on the futures market, where we did see a limit up move on Tuesday, only to close steady with last week. We've probably seen a lot of short covering earlier in the week, but not seen an improvement in cash, and it looks like it's going to be a slightly weaker average cash trade this week. Boxes did not improve dramatically this week, and we're getting a feeling here that maybe there's a little bit more downside on the box beef as we move into next week too, as we're still trying to work our way through a lot of heavy cattle out there at this point, and that seems to be weighing on the cash and the boxes, and it seems to lock our futures, our December contract in at 142, which we were able to bounce off today, and 146.50 seems to be the upside of that range. And until we see a significant movement in cash, I think that range is going to hold. There are concerns about numbers as we move into the fourth quarter, but until we can clean ourselves up through this heavier fat cattle out here and the numbers up front here, we're not going to see any type of significant rally in the futures market. Taking a look at the hog futures for the week, cutouts for the most part steady, a little bit weaker this week on the pork cutout. We've been rallying this thing in correlation with the pork cutout. In the whole time we've seen cash continue to dwindle off. We did see the cash really sell off hard today, and in return we did see futures fall. We did see futures down on the week. We couldn't get that October to push up through that 170 area, or excuse me, that $70 area. We did close it weaker on the week, finally following cash. Lower volume as we ended out the week as well. We'll have to keep an eye on that cash market next week. If we can get December futures up in that 64, 65 area on any type of rally or bounce, it's certainly an excellent hedging opportunity for some open hogs out there. So if you have any questions about these or any other markets, please feel free to give us a call here at BIS Commodities at 1-800-373-2525. And everybody have a great week.